The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Excuse me. Welcome to the January 16th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, well, let your fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the heading, the subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 122 points, 25.925. S&P's up 4 at 27.90. NASDAQ 100 up 13 points at 67.71. Russell 2000 trading down about 4 points, 15.88. The stocks are up 0.9%. You've got the VIX up strong, 13%, up $1.32. It's really an interesting market. Gold is up 50 cents. Trade out at 13.3540. Silver's up 3 pennies, 17.18. Light sweet crude back 57 cents. Leading the charge here to the upside. It is Priceline up $15. Equinix up 13. BlackRock up 11. Amazon up 8. Blackhawk Networks up 8. Baidu up 7 to the downside. Alliance Data Systems $12.50 to the downside. You've got Vexus Inc. down 12. Bluebird Bio down 8. Iger Biopharma down 7.50. So we've got some stocks to look at. Of course, I want to look at what you want to look at. The only question that we've got right now, well, there's two of them, I see. The first question came in and asked if I would, this was earlier in the morning, if I would go ahead and take a look at a Bitcoin chart. And so I will. In order for me to do that, I don't have access to the Bitcoin exchange on any of my systems, so I've got to go to some sites, grab the data, download the data, stick it into a spreadsheet, massage the data, so to speak, and then go ahead and export it to a file, upload it into my system. It's a lot of work, really, for something that I don't trade, but nonetheless, let's go take a look at it. So this is really the data as of yesterday out here. It's not going to have today's data and its move, but if we do, and I don't even know where it's trading right now, maybe somebody in the den would find out for me or let me know, because we'd want to take a look at the candle session here from what looks like May. Wait. This is the what's the date on this? December 23rd, and that low of 11,833 out here. But here's what we know. Look, you can apply to Bitcoin. The tools that you and I use are agnostic to what the instrument is behind it. These instruments, all instruments, they make the same type of highs, short-term, long-term, with regard to the tools that you and I use. They do so at the bottom. We can also go take a look at Japanese candlesticks to help us with interpretation. And what I mean by this, if you're watching this on TigerTV, it's not the futures. So Tarpon 2, I'm taking a look at Bitcoin. I get the Bitcoin futures on the CME and the CBOE. So this is a little bit different in actually taking a look at what I'm going to guess is the actual coin itself, not the futures contract. So as we take a look at that, and that's what we're looking at. We're not looking at the futures contract because, quite frankly, it hasn't been trading long enough for us to really gather enough data in order to be able to apply an entire set of tools to it. But if we take a look at Bitcoin itself, and we look at the bottom here at November, when I say a bottom, we take a look at a low from November 13th, and we start doing that wave count to the upside. You know how markets love to sing in the key of G. We can show you this nonstop. Now, do they always, and I do mean always, identify tops and bottoms? No, nothing works always, but it works often enough that you certainly pay attention to it. So in taking a look at this chart here, there are two topping patterns that you're very familiar with. One, getting to that seventh wave move. Two, price moving higher, doing less relative energy. What do we always wait for? We wait for the cavalry to arrive, and that's going to show up in some form of a Japanese candlestick. Now, it doesn't always have to. It can be a key reversal session out there, which is not going to be qualified underneath the Japanese candlestick program. But as we take a look at this chart here, what we're going to see on the trading session, looks like December 20th, created that nice little bearish engulfing candle, confirming that price relative strength divergent pattern out here that Stevie loves to trade, and price gets below what? Stevie's red line. Now, what we're watching for on this chart out here, there was a move down, or what I would be watching for, is the low from the session here. Looks like this is December 23rd. That low again is 11,833. The reason you want to pay attention to that is because if price closes below 11,833, then you have the old A to B equals CD price projection. That price projection gives you 94.5640 as its first move. Now, I'm grabbing all of this data, so I cannot vouch for the data, but it's coming from, just so I'll show you out here, it's coming from this coin market cap. And all I'm really doing is just I'm grabbing all the historical data, and that's what I'm posting into the spreadsheet. So I believe this is accurate data. And therefore, if it's accurate data, well, then my system is accurate with regard to the charts. And so is there an A to B equals CD to the downside right now? No, because price is not below support. Now, support on this thing would really be the trading session of, I didn't want to do that, the trading session I would be using of December 31st, because you did have a bullish reversal signal on January 1st out there. But whether it's 1183 or it's the low of 12350 out there, anything below those lows, then that gives you the A to B equals CD to downside. 94.56, maybe it's 72.10. And the other thing to be watching is we can see that this price oscillator is headed down towards zero. And that's really going to be the level to watch. As price should the price oscillator get down there, what you're going to anticipate is a bounce in price up to Stevie's red line. Does that happen all the times? No, but it happens so gosh darn often that you do not ignore that pattern setup. And that's where it would really tell you whether or not the next bottom has come into Bitcoin. Again, this is not the futures contract. We can go take a look at that, but that's not going to give us this daily type of data out here to show you the tops and the highs out there. As an example, one of our dinners, I believe, went ahead and went short the NQ. And what this dinner used was nothing more than a seventh wave move to the upside. If we take a look at this, you'll see here, now futures have been trading since Sunday evening at 6 o'clock. And the actual law, I'll show you, this is a tool that I developed out here. And this helps me to identify, you got to be able to identify where those tops and bottoms come in. When we come down here, you'll see why I use this candle session from 6:30 in the morning on a 30-minute chart and how it got to wave number 7. How does that work? And then price moved down. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So just to finish off that Bitcoin, here is the Bitcoin futures contract for the CBOE. Right now it's trading out at 11,200. This is a 5-hour chart, and the only data that I can use off of this is to take a look at market profiles. You see, we have such limited data out here. If I put this on a daily time frame, it's not going to give us a whole lot in order to do any kind of technical analysis. And really what I'm looking for here would be some of the market profiles. What we will see on all time frames, those time frames being 5-hour, 4-hour, 1 hour, 30 minutes, you'll see all of them have red shoots, so to speak, and saying they're all trading down below the bottom of their box of support, and therefore prices should continue to head lower out there. Now, I had mentioned if we take a look at a 30-minute chart, we just take a look at these tools, and they repeat over and over again on multiple time frames. You can see how price was able to make it to this seventh wave move. This was at the open this morning, so this is at 10 o'clock or slightly after the open. Gets up to that seventh wave move. You get a close below Stevie's red line, and that is at 11 o'clock. And right now, price comes right back to these little red dash lines. What are those red dash lines? Those happen to be time to mark support levels. So price has come back to support. It's tested it and held it. Its price oscillator not down at zero just yet. Should it get down towards zero, there's where you're going to anticipate a move, a bounce higher to go test Stevie's red line out there at the 60. Well, right now it's at 68.06. That's not the number where price necessarily would bounce to, but you got to take things one moment at a time. Now, this is a 30-minute time frame chart. If I change this to a 60-minute, and I'll show you the reason I want to change this to a 60-minute chart out here, because the question is, do we have any kind of confirming signal? Now, here with regard to the wave count, I would just start right down here at about 10 o'clock. That only gets you up to wave number 4. We can pull this back a little further. Well, here's a perfect bottom. Okay, so here's the type of bottom that we take a look at when price gets stretched, moves higher or lower, less relative energy. This was a move down here. This is a pattern that formed. Come on. There we go. This formed right here at 11 o'clock on January the 10th. Now, no idea what the wave count is, but we're going to go. This is for the NQ, by the way, that we're taking a look at. It just totally disregarded this seventh wave out here. Hey, where do you start again? to a certain extent, for me, it does at this stage here, visually, I look at it and say, okay, right here, that swing point that we had is going to be the best place. I'll just simply go ahead and put that in red. So at this stage of the game, we can see the prices also pulled back to a time to mark short-term potential support area. And you're right back here into a set of little swing points. So price, in essence, has come back to a breakout area on a 60-minute chart. Here's what the NQ hasn't done. Here's what needs to happen in order for there to suggest to us that we're going to see a continued move lower. Here's the NQ, or the NASDAQ 100 chart, and here's a list of its market breadth. Now, this is provided to us by the folks over at Taz. And when we take a look at this, what you're going to notice is a green line. That represents the number of issues that are above the top of their box. That's bullish, or should be bullish, on top of their box on a 60-minute time frame. Happens to be 46. On the number of issues below the box is 29. So you have what we call a bullish crossover that occurred out here at about January 11th at about 11 in the morning. We don't have a bearish crossover. It says that the move to the downside may be overdone. You just don't have a confirming pattern that you'd like to see. Doesn't mean that seventh wave move wasn't it. It could be. Could be. I would want to see, and we can go to other time frames out here. You're going to see, well, don't trust me. Just say, prove it, Steve. Here is the 4-hour time frame chart. Bullish with regard to its set of profiles. Daily, bullish. Weekly, super bullish out here. Continuing to rise. You've got 81 issues above the top of the weekly boxes out there. That is a very bullish sentiment with regard to how the market is trading, at least with regard to the NASDAQ. If you were looking for some extra help out here inside the S&P 500, you're not going to get it yet from the S&P 500. It still is in bullish formation. So here we have a wider set of data, larger number of issues. And we know there's 227 or 44% of the issues are trading above the top of the box, and 139 or 28% basically below the bottom. If you get a crossover there, then maybe we've got something. We just don't have it as I see it right this moment. Well, quite frankly, as you see it as well. So now let's go take a look at, well, what other information can we try to glean from these charts to figure out where in the heck the market is headed to? Wouldn't you like to know? Okay, let's go back and start from the beginning. Well, where's the beginning? Out of the place where I'm going to, oh, I can't do that. Somebody asked about BVN. We have to do that first. All requests come first. So when we take a look at BVN, we're going to start off by taking a look at our TAS profiles on 3 different time frames. So we've got the daily, the weekly, and the monthly. Daily's on the left. Weekly's dead center. Monthly is on the right. We're taking a look at these profiles to help us identify whether the actual instrument is bullish or bearish. If it was trading below the bottom of a current daily profile, it would be bearish. If it's trading above the top of a profile, it's bullish. So there can be neutrality. In the case here on a daily basis, and this is Compania de Mina. How do you like that for pronunciation? Pretty much a butcher, I'm sure. But what we know is price in this is trading with inside its box. So it's either bullish to neutral, because we're not below a box. It is a bullish structured box. This much we know. We know that because the center line, $14, is closer to the bottom, $13.85. This would suggest to me that BVN is going to go target the 1501 level. Now, it has already traded into its swing point from January 5th. That has 1 million shares. You have 844 today. This is moving into a swing point with volume. Even if it closes below 1481, you're trading at 1476. It's a rejection on price, but it is not a rejection on volume. Says that price will at least be back up to the 1481 level. The weekly chart has price trading above the top of its box. That is $14.72. And the monthly is trading above the top of its box at $12.70. So this is looking pretty good as we speak right now. As far as the weekly time frame chart is concerned, what you want to see this equity do is trade into August 15, 2016. That is 6.9 million shares, the bottom of which is 1493. Let's just go ahead and draw a line here. Let's see if we got a yellow line that's out there. Oh, well, we got it says Apogee. We'll skip that, but it's 1493. The first time in here was with 6 million shares. So this is just simply was lighter volume, 6.9 okay, was going against, or 6.1 was going against 6.9. So it's not bearish, but it just is recharging, trying to get the energy to take out the B point of an A to B equals CD to the upside. And that will be a doozy. Should that occur, and we don't know if it will or it won't, but should that occur, we've got a price projection on this equity that'll give you a run up into about the $23 level. It's trading at $14.77. So, Harley, Krishna, what do you think about them apples as far as BVN is concerned? All right. Now I was going to say, let's go back to the beginning. We're going to go to this break. I'm going to check my emails because requests do come first, unless I have something that's just so utterly important that you might want to know that. But otherwise, we'll go to questions, and then we'll go back to kind of the overview of the market. Folks, we are in a vertical market. Very difficult to trade because most of us haven't done it. We don't have necessarily the mindset to do it. But you and I, we can accomplish anything. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Condolences if you're a Saints fan out there, but what a football game, huh? What a football game. All right, so we had a request out here. This is from Robert M. Robert M. says, I've got good profits in XLE. Are we at a top? Thanks. So let's go take a look at the XLE. And let's start here by taking a look at our 3 time frames. Okay, so we're taking a look at daily, weekly, monthly. Daily, you're above the top of the box. Weekly, above the top of the box. Monthly, you are headed towards, or looks to be, or appears to be headed towards 81.17. Bearish profile box on a longer term. Means any close above 81.17 says that the XLE is headed back towards its highs in 2015, 2014 out there. Not there yet. 81.17 is a key area to break through. If we take a look at the weekly chart out here, what we're going to see is that price is right now trading into, Robert, price is trading right into its swing point. The swing point I'm referring to is the week of December 12, 2016. 90 million shares back then. So this is making, or has made, or is in the process of making, a 100% move of a move. What does that mean? That means that you have a swing point where you see a change in trend. In this case here, December 12th, price moves lower. Now prices move back up there. It takes a lot of energy to do that. So the little sideways move out here says, okay, that's a lot of energy. It's like, I don't know, it's like losing weight, putting it on, getting back to where you lost. Took a lot of energy out there. It would have just been better if you hadn't put it back on. You can kind of get my picture out here. So now we take a look at it. 90 million shares is what it was able to do in volume back in December 2016. Well, last week, as price closed into it, it was 67 million shares. It's only 1 day of trading, right? We've got a 4-day work week out here. You've done 8 million so far. Say it is 11 times 4. You're at 44. 11 times 5. Maybe it'd be 55. I don't know that that's what you're going to do. Still way short of 90 million shares. Nonetheless, if price was able to close above 78.45, that would then become your new support level. It would be a breakout. It could be an A to B equals CD to the upside. I'm giving you the longer-term picture, the longer-term potential possibilities inside of the XLE. Are we there yet? No. We're taking a look at a weekly chart. If it closes above that, 90.33. 98.09 would be the print on this longer term. What I don't know, Robert, is, and you've got good profits, I don't know, is the intention. What was the intention behind the trade? Is this a longer term thing? So you want to consider riding out some sideways movement or move lower. You don't have any break of any kind of a profile here with regard to a support line. If we take a look at a daily chart and you're looking at kind of using daily tools out here when maybe it was more of a weekly time frame that you had when you got into the trade, then I'm going to confuse the all holy heck out of you. Now, I don't make this stuff up. If we take a look at its wave count from the most recent blowout here, which we're going to use as October 27, 2017, this is in wave number 7. Wave number 7 can be where you see the largest corrections. But let's face it, if that's going to occur, you're absolutely going to see a close below 75.93. That is Stevie's red line. You're at 76.96. You're $1.03 away from that. Can you take that kind of heat? Maybe that's where price is headed back to. What if it gets below that? Well, then you're taking a look at the $69, $70 area. That would likely be where the pullback would occur. But otherwise, the XLE, as we speak right now, is looking muy bueno bullish. That was not very good vernacular, but you kind of get my drift out here. Robert, I say you've got to, if you've got a nice profit in this thing, you want to try to let it run. Don't worry about, well, maybe worry about it just a little bit, a scoosh that you are in wave number 7. But other than that, you've got to see it close below Stevie's red line of 75.93. And by close, I mean a close. And really what you'd want to do is go take a look at oil to try to figure out, hey, what is oil doing? Because of the direct correlation that it has to the energy sector. Hopefully that helps you out. We've got a question here to take a look at XLY. That's coming in from Tarpon 2. So let's go take a look at that for him and you. Oh, you got to like it. It just flows off of the tongue out there. Now, with regard to, I'm just off screen here, just kind of checking the old wave counts out there. In this case here, not in wave number 7. It has blown past that level. If you take a look at my daily chart, let me put this up on the screen here now. What you're going to see is price was moving higher, doing less relative energy through last Thursday. On Friday, it just said, the heck with you. And that's what you like to see, because that's where the significant tops and bottoms come when price gets stretched. Is price stretched now? Well, not in relationship to the type of pattern associated with market tops. Doesn't mean that it can't form a top out here. But when we take a look at the daily chart, this says that price has support, at least at Stevie's red line of 103.39. Write that down on a pad of paper out there. If we look at the daily chart, support would be 102.34. But just 3 trading days ago, on January 11th, you had a brand new bullish or bearish profile box form. Bearish because you had the center line closer to the top. And what did price do? Blew right through that. In vertical markets, we haven't even gotten to that yet. In vertical markets, very frustrating for both bulls and bears. Right now, it is not frustrating for the bulls. It will be. We don't know exactly when, but it will be. And there will be some wild swings out here, enough to upset both, enough to flip the bulls to the bearish side, just as the bears are licking their chops, and then it goes back to the bullish side. So you've got to really, it depends on what your time frame is. If you are of the belief that the Dow is going to be at 31,000 or 30,740 to be exact before the end of this year out here, then you've got to take a look, or you should take a look at a longer-term trading strategy and be willing to ride out some of the storms. We have had hardly any rain just yet, just a little drizzle. Let's go back to XLY. At this stage here, when you take a look at the daily, it's bullish. It got super bullish last week. Not that it wasn't bullish before that. If we take a look at A to B equals CD patterns on the weekly chart, there's numerous ones. Let's take a more conservative one. Let's take a look at this trading session here from the week of June the 5th. 29 million shares. What was it passed with? It was passed with lighter volume. Well, 35 million shares decided to show up on November 27th. So we're going to go ahead and hit the bell. Ding! Ding, ding, if that's a confirmed A to B equals CD to the upside. We're not going to be so, what would be the word, anal about the fact that it crossed it maybe a week later. So where's the XLY, the consumer discretionary sector, headed to? If you're long from 95, you're long for the ride that's going to take it to 108, even Steven, and it could go higher than that. No reason to not set its sight on 113.47 out there. And let's face it, if the Dow is going to get up to the 31,000 area, the S&P is going to enjoy the ride too, and the consumer's discretionary area is going to enjoy a ride too to the upside. Now, that's all the requests that we have so far. So let's try to go back and step this, because there are some kind of weird warning signs out here, and I do mean weird. If we take a look at the spot volatility index, it's trading at 1152. You know, under normal circumstances, I would say look out below. Why? Because the yellow line, which is at 1020, is a 50-day exponential moving average. And you know, truly, the predominant majority of the time when the spot volatility index is trading above the 50-day exponential moving average, you see an S&P 500 move lower, and sometimes in large chunks of change. This little puppy has been moving higher with a rising spot volatility index. In the past, it's at least meant a retracement, even though sometimes just a scotch or scotch or skosh. What will it be this time? It doesn't even matter. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How was your weekend?
Hello, Steve. Can you hear me?
I can hear you just fine. Can
Hello.
you hear me okay?
Can you hear me?
I can. Yes, I can.
Hello, can you hear me?
I can hear you loud and clear.
Okay, I'm sorry about that.
No.
Anyway, I was just wondering on natural gas. It's been through a roller coaster here this morning, and I just wondered what your thoughts were if it breaks through this 313 range.
Sure. So let's take a look at natural gas. And as I really tried to share with you this morning in the newsletter, because I know that you are long some call options in UNG, what we were looking at was the fact that natural gas this morning was forming a Gartley buy pattern. And that's exactly what it did. In fact, it completed the A to B equals CD down really right to the penny. $3.03 out here. And then things started moving higher. So it's got a 30-minute chart. It's done what you wanted it to do. And thankfully, it just made the one-to-one A to B equals CD. That then takes us to what I shared with you in the newsletter, which said we really want to see natural gas close back above 309. And the 309 level, you're trading at 314 right now. It's trading above that. So that gets us back to the bullish side. In the case of the 240-minute chart, it's had a bearish profile box out here, which said if it doesn't close above 309, it could head down to 296. Doesn't mean you'd close out the trade, but you would be looking at, giving back some of your gains out here. It's also the top of the daily box out here. So closing above that gets you back to feeling better about the trade. Now, I know you've got some expiring options for this week, and that's where it really makes it difficult, to try to time this from what's going to happen over the next couple of days. What I can share with you about natural gas right now is it still is bullish. It needs to be able to clear the trading session from November 13th. That's at a price of $3.23 out there in order to clear all types of resistance. I have no idea if this is going to be able to do that between now and when you would want to go ahead and take profits on that trade. But it still looks like 327 to 341 for me right now. In essence, you've had a sideways move for the last 3 days out there. And I don't really have much more I wish I could find something more to provide to you, but still looks longer term bullish, but that may not help you necessarily with your time frame. Does that Is that making any
Oh,
sense?
that's fantastic. I'll watch if it, for myself, if it drops below 309, I'll make sure I get out.
Yeah, it's
Short
but you
term.
sure. And
Short
you
term.
like the action that you saw today. That's the most
Can
important
you
thing.
make any comments about gold and silver, or have you already?
I haven't. Gold is it's a beautiful thing. Gold right now just really trading sideways out here. There is nothing in the chart to suggest to me on the daily chart of gold that it doesn't want to move higher out here. 1327.30 is the number to look at for support, but it looks to me like this is headed higher, much higher. But on a daily basis, it looks good to me. Silver is the one that really did the test today, and that test run was testing its red line, that oscillator and change line. It held as support, so it looks to me like silver wants to get up to 1854. You're at 1722 right now, so holding and closing above 1708 was a bullish event for silver.
And that should help out an eagle. Yeah.
Yeah, it should. Yeah, it should help out. It's by
Okay.
I saw a pass earlier, which were long, and that was looking very good.
Thank you very much for your comments. Thank you, sir. Bye.
You bet. Take care. That was Ron in Denver. So we didn't have any. Thanks. I checked that out earlier this morning with regard to what was in UNG, and it was still showing me that it was holding February. So let me go to and that was certainly was as of Friday, but one of our debtors is saying that it's been switched over from February to March out there. But even if I were to put the March contract up, I think I've got that. Let's just take a quick peek at that, see if I've got that. We'll switch over to it and take a look at its trading pattern here for Ron. That way we give him the best information. I think I've got that here. Let's see, NQ. There we go. So we'll punch this up on our screen. I would imagine we're going to see the same. No, this is going to have to update before I can, because it's trading at 294. I'm going to have to, I'll do, when I get to a break, I'll go take a little further look at that and then get back to Ron on that. Look, with regard to the comments that I made earlier, let's just start from here. If we take a look at the Dow, we're in this, what we'll call vertical market, right? We need to know what our market conditions are. And there's no question that we are in a vertical market. And we're going to focus on the Dow right now because we have the most historical information to do that. But you can see from November 2016 on a monthly basis, okay, you can just basically just a straight line to the upside. These are all monthly charts here. The important thing to also understand is where is the market? Where are the markets getting their fuel from? Well, we've talked about this. The case of it's all around the world in the major currencies, euros, yen, and pounds. The Dow is broken out in all of those currencies. Those traders that like to trade breakouts, and there is a ton of them, are going ahead and pouring money into the Dow until proven otherwise. Why would you not do that? Well, if we take a look at the summation index, the summation of all the advanced decline oscillator data, you're going to see that it is in a bullish mode, a green line. That's the left-hand side daily, green line on the weekly, green line on the monthly chart out there. It's a tool that works very well. It's giving you a message that it too wants to move higher. If we go take a look at, now I had also mentioned, let me switch over here, that this is a vertical market. We've seen other vertical markets out there. And if we take a look at just one of them, just staying with the Dow, what you're going to notice is in vertical markets, you have hellacious, can I say that, retracements or corrections out here. So they do occur. And they do occur in magnitudes, or they have occurred in magnitudes of 9.0s, 6.0s, 12.0s, 10.0s, 13.0s. The average is about 10% when one occurs. This is a weekly chart, just going back into 19, 27, 28, 23, 24, 29 time frame out there. And I'm anticipating that we're going to see the same type of scenario eventually play out here. And imagine if we get a 10% correction to the Dow. That's 2,500 points. Maybe it starts today. Maybe it started earlier this morning. I can't rule that out. And you've got to anticipate it. That's what makes trading this vertical market very difficult out here. But you would want to look at any type of correction like that as a huge, gargantuan buying opportunity. Longer term, when we take it, how can I do this? How can I do this? Where can I do this? can I do this? If we take a look at this chart here, this chart is the Dow historically, take a look at it on a quarterly basis out there. And this chart is on a logarithmic scale. And it's really a cool chart to be able to use those patterns to help you identify support or resistance. And if you take a look here, back in 1987, this is this red line right back here, 1987, the so-called 1987 crash. It found support at the top of that logarithmic scale. If we take this logarithmic line and apply it to where we're at today, that's what shows up as these green lines. It's really the lower one, which is where we found support in 2015. The Dow has created a new trading range as long as it stays above that level. It's headed to 30,740. It'll get there. It's not a question of if, it's a question of when. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So, Ron, I was looking at what's inside the UNG right now, and I couldn't come up. The same site didn't show me what was inside there. It appears to be trading just like the February contract out here. It does not appear to be trading like the March contract. So if this thing had completely rolled into March, we probably wouldn't see it trading because the candles and everything kind of are similar to what we just took a look at. The reason is here is the March contract, and it's trading right now down into Stevie's red line of about $2.95, and the close below that says that it would continue to pull back to where it could be about 274 would be the first place that you would be looking at. So use that information, maybe scour the markets out there. I know you've got nice profits. It's never a bad time to take the profits out here, but you've got to know that the underlying instrument inside that UNG is going to be the contracts, the futures contracts that are trading within that. Hey, as we wrap up the show here, let's go take a look at. I'll give you some levels to pay attention to with regard to whether or not there's going to be more of a retracement or pullback. We're going to take a look at the levels inside of the Dow right now as we've been on here. This is shorter term. And the key level to be watching today is 25,894 inside of it. Inside the ES Mini, it's going to be 2794. Inside the NQ, it's going to be 6786. If all three of those, come the end of the day, prices trading below those levels, that suggests that you've got more retracement. Where is the retracement inside of the NQ? Well, if we go take a look at its daily chart, you know it's going to be Stevie's red line. That would be the first target to the downside. And Stevie's red line, as we speak right now, she's priced out at 67.26. You will also see that it is in wave number 7, the letter G out here. We know how these markets like to sing in the key of G, but it hasn't sung until it gets down below Stevie's red line, 67.26. Folks, stay tuned. Your favorite polar bear, my favorite polar bear, in fact, the favorite polar bear in the entire world, he's up next. That's David White. After David, you've got Tom O'Brien, 3 to 5, Andy Heck from 5 to 6, as Dave Mason used to say, to take it on home. Have a great Tuesday. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.